For this video, I wanted to cover the Oregon State Earned Income Tax Credit. So the Earned Income Tax Credit, most people are very familiar with this at the federal tax level. So when you file your Form 1040 with the IRS, you can claim an EITC and get a refundable credit based on your income and how many qualifying children you have. But what a lot of people don't know is you can also get a lot of these at the state level. So most states, approximately 30, have their own version of the EITC, and Oregon is one such state. So we're going to go over an example as to how to claim this at the Oregon level. Now, in order to get started, you first have to do your federal tax return. And this is common for computing these kind of state level tax credits because the state will compute its portion of the credit based on the federal amount. So, for example, in Oregon, the amount of your Oregon State Earned Income Tax Credit is 9% of the federal amount, or if you have a family with dependents under the age of 3, it's 12%. So obviously, in order to get started, you have to calculate the federal amount and then you move on to the state. So in our example here, we have John Q. taxpayer. He's a single filing taxpayer. He lives in Salem, Oregon. And he doesn't have any dependents, right? So no qualifying children, but given his income level here, earned income of $18,000, he's still eligible for the EITC at the federal level. So if John looks at the federal earned income credit worksheet, his earned income is $18K. And then if he has the EIC tables in front of him, and these are available in the Form 1040 instructions, he looks up $18,000 for a single filing taxpayer, no qualifying children, and the credit he's going to get for 2021 is going to be $521. So that $521 is then carried up to line 27A, right? We can see EIC here, line 27A for $521. All right, now that John's done that, he can move on to his Oregon State resident tax return. So this is the 2021 Form OR-40, Oregon Individual Income Tax Return for full year residents, okay? So we have John taxpayer here. He completes this form as he normally would, but this year he's going to be claiming the state earned income tax credit, right? So filing status again is single. He has no dependents, right? So this section is blank. Now, the earned income credit piece, okay, so we've got the exemption credit here for $213. Okay, now if we go all the way down to line 35, right, we can see earned income credit. So there's the earned income credit, and it's for $47. Now, $47, if you've got a calculator in front of you, is 9% of $521. Remember, we're taking the federal earned income tax credit, $521, and John, as a single with no dependents, he's going to be able to take 9% of this amount as an Oregon State earned income credit. Okay, so that's why the form is showing $47 here. So $47 is added to the amount of withholding, so the total payments and refundable credits. That's another nice thing about Oregon here. The earned income credit is fully refundable, so even if you have exhausted using this to offset all your tax, you can still get a refund of the excess amount. So $47, remember, it's 9% of the federal credit amount, 12% for families with dependents under the age of 3. And Oregon doesn't really have a worksheet to go along with this. They simply want you to report on line 35 the amount of the EIC that you're going to be eligible for. So there's a number of other forms and schedules within here, but none of these, frankly, apply to the EIC portion. So it's included with the return, but again, not relevant for purposes of the EIC. The point to remember is that, given your status, right, whether you have dependents under the age of 3 or not, you're either using 9% of the federal or 12%. And those are the 2021 rates. Obviously, those could change in the future. Okay, so that covers it for this tutorial on the Oregon State Earned Income Tax Credit. I hope that was helpful. If you have any questions, feel free to leave me a comment below, and I look forward to seeing you again on the next video. Thank you.